Welcome back to Iraqi Dinar Alert. Today we're doing a complete deep dive into the policies of the Central Bank of Iraq and what they mean for the dinar. If you've ever wondered why the dinar is valued the way it is, or what the future might hold, this is the video you need to watch. The Iraqi dinar has been a hot topic for years, attracting everyone from speculators to economists. At the center of it all is the Central Bank of Iraq, or CBI. To understand the dinar, you absolutely must understand the CBI. The Central Bank of Iraq was restructured in 2004 with a clear mandate: maintain price stability, control inflation, and manage the country's currency and banking sector. Crucially, the law granted it independence from the government, which is a global standard for a healthy economy. This independence is meant to shield monetary policy from political pressure. But in reality, the CBI has to perform a constant balancing act. It operates in a landscape of political instability, parliamentary influence, and a national budget almost entirely dependent on oil. So, while it's independent on paper, it's deeply connected to the practical challenges of governing Iraq. To really get the picture, let's look back. Before 2003, the dinar was a mess. Sanctions, hyperinflation, and even different versions of the currency were circulating. Trust was at rock bottom. After 2003, one of the first major acts of the CBI was a massive currency reform. They issued the new Iraqi dinar notes we know today, replacing all the old versions. This unified the monetary system and created a foundation for stability. This stability is why the dinar is on what's called a program rate. It's a managed exchange rate system, not a free-floating currency like the US dollar or the euro. The CBI sets a reference rate and keeps market changes within a very tight band. They prioritize stability over speculation. Why not just let it float freely? For an economy recovering from conflict, a free float would be disastrous. It would open the door to capital flight, currency manipulation, and massive inflation shocks. Control is simply safer than volatility right now. One of the main tools the CBI uses to maintain this control is the currency auction system. Every day, the CBI auctions US dollars. The main goals are to stabilize the dinar's value, control inflation by managing the money supply, and provide dollars for legitimate imports. This system has faced criticism for issues like corruption and smuggling. But the CBI has been rolling out major reforms. They've introduced digital platforms for tracking, increased compliance rules, and are working closely with international bodies to clean up the process. These auctions are part of a broader strategy for controlling inflation. The CBI also uses interest rate adjustments and other monetary tools, and honestly, they've been remarkably successful at keeping inflation in check compared to other countries in the region. The backbone of the entire Iraqi financial system is its foreign currency reserves. We're talking about tens of billions of dollars. These reserves are critical. They back the value of the dinar, ensure Iraq can pay for imports, and maintain confidence in the financial system. Strong reserves give the CBI credibility and the power to manage the currency effectively. But there's a huge elephant in the room: oil. Iraq's economy is overwhelmingly dependent on oil revenue. This makes the country and the CBI's job vulnerable to global oil price swings and government spending habits. The CBI's conservative policies are a direct response to this reality. They have to save and be cautious during the good times to prepare for the bad. Iraq doesn't operate in a vacuum. The International Monetary Fund, the World Bank, and other global watchdogs are heavily involved. They conduct regular consultations, help with reform frameworks, and push for compliance with anti-money laundering standards. Importantly, these international partners strongly discourage any sudden, speculative revaluation. They advocate for gradual reform and building a strong, transparent banking system first. This fits perfectly with the CBI's own long-term strategy, which includes a careful de-dollarization process. Dollar dominance in the local economy weakens the CBI's control and reduces demand for the dinar. So, the CBI is encouraging the use of the dinar for local transactions, restricting large cash withdrawals in US dollars, and promoting dinar-based salaries. This is a marathon, not a sprint. Another key part of the puzzle is modernization. The CBI is pushing a massive upgrade of the banking sector. We're seeing new digital payment systems, better international transfer capabilities, and wider SWIFT integration. A modern, trusted banking system is an absolute must before any significant change to the currency's value can even be considered. This brings us to a popular topic: deleting the zeros. This is one of the most misunderstood concepts. It's a redenomination, not a revaluation. All it does is make accounting simpler by issuing new banknotes with fewer zeros. It does not magically create wealth. If you have a 1 million dinar note, you'd get a 1,000 dinar note in exchange, but it would buy the same amount of goods. The CBI has postponed this multiple times simply because the economy isn't stable enough yet to handle the transition smoothly. So what about the RV, or revaluation, that everyone talks about? The CBI itself does not endorse these speculative narratives. Their focus is on real economic growth and stability. A true sustainable increase in the dinar's value would have to be gradual, market-driven, and supported by a productive, diversified economy. It wouldn't be a secret event happening overnight. It would be the result of years of successful reforms. We also can't ignore regional politics. The dinar's future is tied to trade settlements with neighbors like Iran, relationships with Gulf banks, and the ever-present risk of regional instability. The currency can't make a major move without considering these complex external factors. Ultimately, a currency's value is built on confidence. Confidence in the rule of law, political stability, and a trustworthy banking system. The CBI's policies are all designed to build that long-term confidence, not to chase short-term speculative gains. So, let's look at the most likely future scenarios. The first and most probable is continued stability with a managed rate, gradual reforms, and slow, controlled appreciation over time. Another scenario involves deeper regional integration, where increased trade creates more organic demand for the dinar, strengthening it naturally. A third, more optimistic scenario would be a major breakthrough in structural reforms, leading to a diversified economy and, eventually, a more internationally recognized currency. Notice that none of these scenarios involve an overnight miracle. To wrap it all up, understanding the Central Bank of Iraq is the key to understanding the Iraqi dinar. The dinar isn't weak because Iraq is poor. It's managed cautiously because Iraq is a nation rebuilding itself from the ground up. The CBI is navigating a minefield of political, economic, and international pressures. For those paying attention to CBI policy, the message is clear: stability comes first. Reform is a slow and deliberate process, and speculation is not part of the plan. The future of the Iraqi dinar won't be written by rumors on the internet, but by the disciplined policies, economic growth, and institutional strength that the Central Bank of Iraq is working to build every single day. Thanks for watching, and be sure to subscribe for more deep dives.